Daljeet Singh Kohli also joins us right now. Daljeet, what should one do? Keep the shopping list ready and start buying, or just stay away from the market because it's the falling knife right now?
Yeah, good afternoon. No, I don't think there is any panic or a situation where you have to stay out of the market. Of course, you cannot time the market and just be right exactly at the same point when it will be hit the bottom. Nobody can pick that bottom. You have to be ready with the purchasing list. I think a lot of stocks which you were earlier wanting to buy and some froth was getting built up, valuations were getting out of whack. Those valuations will now come into some kind of reasonable zone. So, depending upon the choice, which sectors you want to be, and there will be, I'm sure you'll get some opportunities. Till last week, we were all cribbing about that we want to buy, but we are not able to find something because valuations are too much. So now this is probably giving you that opportunity. I don't think that today's correction is kind of any change in the broad outlook of the Indian stock markets, or for long-term investment, there is anything which has structurally changed. It's just that there is, after so long of one way up move, there would be some reasons and some factors which will drive this kind of volatility in the market.
I just want to get your sense on some of the individual names, and I'm just mapping Trent right now, which has breached that 7K mark. I think the November lows were around 62, 6,300 thereabouts. Do you think it can get to that level, and does it become a buy then?
So I don't believe that the stock should scale down as far as to that 6,200 levels, because the most important point which you look out for, that it's not been a flashy recovery for Trend. So the sell-off was very swift for the stock, but the way the stock moved from the 6,200 marks towards the 7,000 plus levels was more of a gradual and a very labored up move for the stock price. That means that there were a lot of stronger participants which on the way up to this 700, 800 point rally for the stock price, I think saw good participation. Now on the way down, you might not see the weaker hands trying to exit the stock very quickly, and that could be one of the major reasons why the stock has already built in a buffer or a cushion of this 700, 800 points, as compared to many of the other whether it's pairs or large cap names, which are now struggling to break past below their previous swing lows. So I think I would probably believe that in case of the stock happens to come by to even 6,700 or 6,500 mark, that would actually be a very good support point.
Okay, that's the take coming in on Trent right now. Naresh, what is your own sense on metals? Because they are the ones dragged most right now, led by, I guess, Tata Steel.
So overall, metals have been in a downtrend, specifically on the steel side much more, but even aluminum stocks have taken a drop right now. So for now, the trend is weak, and given that they are high beta stocks, you want to wait for a recovery in the indices before you can actually bet on metals. So for now, it's an avoid as such.
It's an avoid as far as the metals basket is concerned. But Daljeet, what do you think is the problem area for the markets? Is it the fact that the FI outflows continue? Is it the fact the yen carry trade Aisha was pointing out to? Is it the nervousness around HMPV virus? Or is it purely about earnings and fundamentals, or is it something technical?
I think most basic thing is the earnings part, which is actually after 3-4 years of very strong up move, we are seeing that moderating, and we expect that it will probably moderate for next year also. Many people were believing that probably Q3 or second half will be much better and earning recovery will happen fast. But in our understanding, probably that may not be the case. So market will have to adjust to this new reality. We have seen in last 2-3 years that 20%, 25% earning CAGR was coming in, which will probably not be the case now. One, it is because of the base effect. Second, we have already lost 6 months in this election and all these weather-related issues, etc., when labor was not available. So first half of the corporate India has already shown the numbers which were not good. Third quarter numbers are now going to start from this week onwards, and we are not getting very encouraging commentary. Some of the big companies have already shared their estimates today, and we've seen, and especially in financial services, not very encouraging numbers. Small bit of ray of hope has come from rural India, where we are seeing that rural consumption is picking up, but that is getting compensated or negated by the urban consumption, which is under the impact of inflation. So I think overall net impact would be that to expect 8 to 10% of earnings growth would be more reasonable. And that would mean that some kind of valuation derating will happen. Some expectations have to be mellowed down. So we could see this kind, and along with all this, we will have an impact of currency. We'll have some global uncertainties, new government coming in US, how things will pan out. That will also create some kind of uncertainty. So, but basic reason is, I think, earnings. That is what the crux is.
Yeah, gearing up for earnings, and you can definitely feel that heat on the Nifty Bank and financials overall as well. But Kunal, how much more of a fall do you think for HDFC Bank? Because this is in addition to Friday when the stock did get clobbered ahead of its quarterly updates.
Yeah, I think at least another 40-50 points is what I would expect for HDFC Bank further, because this is the second consecutive move where the stock has given a breakdown of its previous swing support. The first major support point. So when we look at the setup for the Bank Nifty, we were discussing that the Bank Nifty is fallen below its 200-day moving average. Now for HDFC Bank, that level is around 1650 mark thereabouts for the stock on the spot levels. We are closer to 1710 for HDFC Bank, which means that even if over the next couple of days there is a further downtick for the indices or for the markets, HDFC Bank could probably drag down another 40-50 points at least to try and retest towards its long-term moving averages, which means that the sell-off or at least the pain point for the stock is not yet over. My belief is that the stock should, over the next maybe 2 or 3 trading sessions, or maybe over the next one to 2 weeks, I think should drag down another 3 to 4 percentage points.
Okay, point taken. That's the view coming in on HDFC Bank right now. In fact, time now to slip into a very short break. But as we do that, hear out what the experts and doctor have to say on the HMPV virus, because we spoke with a couple of doctors and both maintain the view that there's nothing to get worried about right now. It's a very usual type of virus at this point of time. Of course, need to be watchful of the same. Hear out the expert take on the same.
What we need to just do is just to have a cautious approach to see where and how the progress is happening. As of now, I don't see there is any alarm to be actually created, because these viruses are known to circulate during the winter months, and there is a small rise in the cases which we see all the time. The virus does cause symptoms which could be either upper respiratory tract symptoms and sometimes lower respiratory tract symptoms, can affect adults as well as children both. But I don't think there is any need to panic or any need to be concerned about it right now. I don't think there is any need to actually even think that we are going to go towards COVID way right now. It is just a winter month virus which has seen a spurt in the cases.
This virus should be taken as a passing by infection. This virus spurts up in winters, and that's where we are. I feel no fear, no threat. And undoubtedly, there should be not a blink of any, sitting back like COVID or acting like patients or humans that we were during the COVID time. I can almost assuredly tell you, we are going nowhere close to COVID. This is not going to behave like COVID. There's also a distinct difference. COVID was a resurgence of a new virus. This is an old virus, which probably some mutation. We don't know if they're really mutated or not.
See, I don't think we should be pressing the panic button, because HMPV is not a new virus. It is an existing virus. And the statement, the way report has come out that this is the first case of HMPV in India, which is not true, because HMPV is an existing virus and certain percentage of people do get affected by this virus. And it is not something new. And the baby, the child that has got affected, has got no travel history, and they're all local people. They're not coming from China or Malaysia or some other country. So I do not think there's any connection to that. China's outbreak they are saying, is a new variant of HMPV.
Definitely is being felt, and we've now swiftly, dumped down all the way to that 23,500 level. And to think of it, just last week, we had closed in above that 24,100 print. It's a good 500-point fall that you're seeing from the peak of the day, even though we started off a lot more tempered. Pretty much across the sector weakness. Though only you can see IT is the dots, are the only dots of green in FI, TCS, Wipro, but that too only on a relative basis. And Nykaa, of course, are reacting to its quarterly updates. Other than that, power, infrastructure, banks, real estate, oil and gas, metals, all these sectors are getting clobbered as we speak right now. But Daljeet, where is it that you feel that there could be some more pain in store when it comes to the earnings season? Where could we still see further EPS downgrades?
So it is across the sectors, mainly the stocks which have seen a very high valuation, where we will see maximum pain because you are already building in high growth. No, most of these PSUs, railways, defense, all these fat stocks, power stocks, pretty much the stock sectors that were running for last 2-3 years, you've seen that actually you've built in 30-40% growth regularly. Now, once that expectation changes, then this valuation will look very big.
Okay, point taken. So that's the take coming in. Separately, it's Devyani International up 6%. You have Rainbow Children's doing quite well. Godrej Consumer is sitting with a gain of around 2.25%, and then some of the select pharma names. In fact, Nykaa was doing quite okay at the start of the trading session on account of that Q3 update. Now it's coming a bit under pressure right now, and of course, ITC is that reaction or the adjustment happening to the hotels business. Naresh, what's the sense on the charts of Devyani International and even Godrej Consumer for that matter?
So, if you look at Devyani International, you've seen a good take in the sector as such in terms of recovery. Jubilant Foods leading the pack. But little longer term, if you look at Devyani, there have been multiple attempts around 210 to 220 for the last almost 2 years. And the stock has done nothing beyond that in terms of a breakout. Every time the stock has shown a lot of momentum and again fizzled off. So for now, I would wait it out. The risk reward is not great. And in terms of Godrej Consumer, the stock has corrected from 1500, 1550 all the way down to 1050. We are making a bounce back, but it should again face a resistance around the 1200 mark. So at current levels, still not a buy.
To put in a buy call on any of these names right now, be it banks, metals, or even some of the, consumption plays?
So yeah, maybe consumption, maybe if you select auto stocks, that's where I would probably want to focus on, because there could be a point where, these stocks may look very attractive in terms of risk reward. So for example, from the auto pack, Bajaj Auto is something which looks attractive. Tata Motors, I think closer to that 740-50 mark. If the stock happens to come back or retest that level, that's very strong retracement support for Tata Motors. So these are two attractive, contrarian zones where traders could look at start entering into the stock, especially for someone who's maybe booked out earlier and looking to rebuy the stock from a long-term play. I also believe that Eicher Motors is the other stock which has confirmed a breakout. And after almost 9 months or 12 months of the stock going into almost like a 400 to 500 pointer consolidation from 4600 to 5200 levels. So that I believe could be another interesting name to watch out for, because I believe that with every move from sectors, there are few stocks which emerge as fresh leaders with every market move, and then there are few names which becomes very attractive from a risk reward play. So I think from the latter category, you might probably have the likes of Tata Motors, which could be very good risk reward plays, and even Bajaj Auto in that sense, and probably you might have Eicher Motors, which could emerge as fresh leaders from the auto pack.
Daljeet, what's the sense on the PSU banking names? I mean, that's the worst performing sector today with a cut of almost 4%. I mean, individual names like Union Bank, Bank of Baroda might be reacting to the provisional updates. But are there any PSU banking names that you would perhaps take a bet on?
Not really. As of now, we are not looking at any of these banks, neither PSU nor actually private. Only in the financial services, we have some housing finance NBFCs in our portfolio and some power finance companies, mainly because they are in the niche areas and they have the problem of quality of asset is not an issue and the growth is also there. But with these PSU banks, that the names that you took, I think they are going through a little bit of patchy phase, which will continue for some more time. So we'll wait for the entry there.
Any buys from the PSU banking pack? Naresh, the question is for you. Any buy calls from the PSU banking lot?
So that would be State Bank of India itself. The stock has gone sideways for the last almost 10 months. Available at the 770 prices where it had first reached in Feb of 24. So the stock has gone nowhere. On the election day, June lows were around 750 to 770. So good enough consolidation done. 750, 770 is a good band to accumulate for the medium to long term. And the stock had not seen a parabolic move like some of the smaller PSU banks. So I would expect going forward, SBI to be a best one in the PSU bank basket.
SBI is still the favorite within PSBs. But the one stock which has been in focus has been ITC on account of the hotel demerger. Here's Sharad joining in to tell us all you need to know about this demerger taking place and what gets remained in ITC. Sharad?
Well, yes, ITC Hotels is in focus, and of course, today itself, the entire ITC stock is trading ex the hotel business. Now, of course, calculating the fair value, important things to know, it's debt-free. There would be a cash transfer of almost 1,500 crore rupees. And if you are holding 10 shares of ITC, you will get 1 share of ITC Hotels. Now, brokerages are expecting that the pricing could range between 113 to 300 rupees per share. Now, also remember that British American Tobacco is expected to hold roughly 15% stake in this new demerged entity. Now, calculating the fair value, the difference coming in between the January 3rd close and January 6th opening would be there. And interestingly, this would be excluded from the indices for 3 business days after listing, provided there are no circuit breakers. That's an important point. Now, of course, there might be a delay in exclusion if the stock starts hitting the circuit levels. Now, of course, the listing is expected to happen over the next 1.5 odd months by the mid-February. But now let's also look at its peer, Indian Hotels, and of course the growth triggers coming in the 3 segments in the non-F&B business, Taj Sats category, and also they expected to 2x their revenues by 2030 to a consolidated basis of roughly 15,000 crore rupees. But if we take overall the recent listings post the demerger, the entire time taken for the record date, Jio Financial, it took almost 33 days, Piramal Pharma, it was 45 days, and NMDC Steel was 4 months. Of course, comparing IHCL and ITC Hotels is also a very important point, which I'd like to point out. The rooms, if you look at it, roughly, you could say 13,000 rooms are there when it comes to the ITC Hotels. Almost, you could say double when it comes to Indian Hotels. Revenue per room, the RevPAR, that's an important operational parameter which we check it for hotels. It's almost even Stevens, but if you look at the occupancy, that's on the higher side when it comes to the Indian hotels. Now, let's also look at the market cap expectations and the margin. That's where we derive the valuations also. And if you look at it, the market cap, it's largely double. If you look at the range which have been given by analysts, and the margins is on the favorable side of ITC Hotels. But do remember, Indian Hotels also is having some budget hotels also in their category, and that is why there might be a reason that the margins might be slightly lower when it comes to ITC Hotels. And these are all the consolidated numbers as per FY24.
Much for that, Sharad. But let's take it across to Snehi now to get a sense as to what will be in store for ITC after the demerger, especially with respect to BAT stake and the other triggers forward. Snehi.
Well, absolutely. Now it merits a look on what is going to remain with ITC and what happens to ITC after the hotels business demerger. Now that the record date is also here, ITC X Hotels price discovery happened at 459 rupees per share today, which was roughly lower by 22 rupees. This is what the traders also had previously broadly estimated that would happen to the price of the stock today. Now, how does ITC look today in terms of financials on the back of this demerger, post the demerger? If you take a look at the financials of ITC, the hotels business contributed 3,104 crores recently to the overall revenue, which made up 4% revenue of ITC. So we can expect a cut of roughly 3,100 crore rupees when it comes to the revenue part. Similarly, for PAT, ITC Hotels made up 3% of ITC Limited's overall PAT, which is roughly an amount of 765 crores. So from the overall PAT, we can expect a reduction of roughly 765 crore rupees in the next quarterly earnings as well. Now, how will the SOTP, the sum of the parts, shape up when it comes to ITC Limited? Remember, the cigarettes business made up 62% of the overall ITC Limited business, which will now come up to 64%. FMCG will contribute 18%. Paper boards, which is a strong segment for Q3, will contribute 5%. Agri will also come in at 5%, and IT and cash respectively at 4 and 4%, which will make up the total SOTP pie for ITC Limited post the demerger. Now let's talk about what happens to the BAT stake. The British American Tobacco, they had already earlier stated that they plan to sell roughly 25% stake in ITC. Now, in correspondence to this 25% stake that they want to sell in ITC and ITC's 40% stake that they hold in ITC hotels, this will roughly translate to a 15% stake sale in ITC hotels from BAT. This is what we can expect to happen going ahead as well. Largely, what are some key triggers for ITC going ahead? The first and the biggest one is going to be the prospective GST tax. The chatter has been about the 35% tax bracket. It's not been discussed in the recent GST meeting, but could be on the agenda in the next one. So, whether this 35% tax bracket goes through for cigarettes is going to be important to watch out for. Paper business, which contributes roughly 5% to the overall SOTP. Q3 is largely expected to be a solid quarter for the paper business. So, the numbers on this front will be important to watch out for. And lastly, also watch out for the FMCG business, because overall pure play FMCG players have been complaining about a slowdown in urban demand on the back of inflation, raw material inflation remaining sticky. So these are going to be some important triggers to watch out for. But well, yes, this is what ITC Limited will look like post the demerger of ITC hotels.
Right. Okay. We'll leave it at that. Snehi, thanks for analyzing ITC's demerger and what's the next step here. But Daljeet, good to have you on the show. Thanks for taking the time. We're going to take a very quick break, continue tracking markets on the other side, still lower, pretty much at the session lows, a good 367-point knockoff on the Nifty futures alone.